Hey there! Welcome to this video on the art of borrowing and how you can use other people's money to grow your wealth. Borrowing is a concept that we're all familiar with. We borrow money to buy a car, a house, or pay for education. However, borrowing can be much more than just a way to fund our immediate needs. It can actually be a tool to help us grow our wealth and achieve financial freedom. If you're watching my video for the first time, I invite you to subscribe to my channel and turn on notifications. I regularly share free wealth creation wisdom from successful business people, which can help you improve your financial and business thinking. Now, before we dive into the specifics of how to use borrowing to your advantage, it's important to note that borrowing should always be done responsibly. Taking on debt without a clear plan to repay it can lead to financial ruin. So, as we explore the benefits of borrowing, let's keep in mind that responsible borrowing is key. With that said, let's get into how borrowing can be used to grow wealth. When we borrow money, we essentially have the ability to use other people's money to invest in assets that appreciate in value over time. This is the essence of leverage, and it's a powerful tool that can help us generate greater returns than we could on our own. For example, let's say you want to invest in real estate. You could save up your own money and buy a property outright, but that could take years, and you may miss out on opportunities along the way. Alternatively, you could take out a mortgage and use the bank's money to buy the property. This allows you to start earning rental income and building equity in the property right away, while also benefiting from the appreciation of the property over time. Of course, there are risks involved with borrowing. If the property doesn't appreciate as much as you anticipated, or if rental income doesn't cover the mortgage payments, you could end up losing money. This is why responsible borrowing is so important. You need to have a clear plan for how you're going to repay the debt, and you need to make sure that the investment is sound before taking on the debt. Overall, borrowing can be a powerful tool for building wealth, but it needs to be used responsibly. Throughout this video, we'll explore the different types of debt, how to leverage debt to build wealth, and how to manage debt responsibly. So, whether you're just starting to explore the world of borrowing or you're looking to take your borrowing game to the next level, this video has something for you. Understanding the different types of debt. Now that we've established the importance of responsible borrowing, let's dive into the different types of debt and how they can be used to your advantage. First, it's important to understand the difference between good debt and bad debt. Good debt is debt that helps you generate wealth or improve your financial position over time. Examples of good debt include a mortgage on a rental property, a business loan to start or expand a business, or student loans that help you earn a degree and increase your earning potential. Bad debt, on the other hand, is debt that does not help you generate wealth or improve your financial position. Examples of bad debt include credit card debt used to fund frivolous purchases or high-interest personal loans used for non-essential expenses. Now let's explore some of the various types of debt you may encounter in your financial journey. Credit cards are perhaps the most well-known type of debt. Credit cards allow you to make purchases on credit and pay back the balance over time. While credit cards can be convenient, they can also be dangerous if not used responsibly. The interest rates on credit cards are typically very high, which means that carrying a balance can quickly lead to significant debt. However, if used responsibly, credit cards can also be a tool to help build credit and earn rewards points or cashback. Personal loans are another type of debt that can be used for a variety of purposes, such as consolidating debt or funding a home renovation. Personal loans typically have lower interest rates than credit cards, but they still need to be managed responsibly to avoid falling into debt traps. One advantage of personal loans is that they often have a fixed repayment schedule, which can help you stay on track with your debt payments. Mortgages are a type of debt that is used to finance the purchase of a home. Mortgages typically have lower interest rates than other types of debt, making them an attractive option for many borrowers. Additionally, mortgage payments build equity in the home, which can help you build wealth over time. However, mortgages also come with significant risks, such as the possibility of defaulting on the loan if you can't make the payments. Another type of debt that is often used to build wealth is investment loans. Investment loans are used to finance the purchase of assets that are expected to appreciate in value over time, such as real estate or stocks. Investment loans can be risky, as there is no guarantee that the assets will appreciate as anticipated. However, if the investment pays off, the returns can be significant. Finally, let's touch on student loans. While student loans are often associated with bad debt, they can also be considered good debt if used responsibly. Student loans can help you earn a degree and increase your earning potential, which can help you build wealth over time. However, it's important to make sure that the degree you're pursuing is likely to result in a good job and sufficient income to repay the loans. So, those are just a few examples of the different types of debt you may encounter in your financial journey. Each type of debt has its own pros and cons, and it's important to carefully consider your options before taking on debt. Remember, responsible borrowing is key to using debt to your advantage. Leveraging debt to build wealth. Now we're going to explore how borrowing money can be used to build wealth. First, let's talk about how debt can be used to invest in assets that appreciate over time. One common example of this is real estate investing. Real estate is an asset that tends to appreciate over time, meaning that its value increases. By taking out a mortgage to purchase a rental property, for example, you can generate income from rent payments while also benefiting from the property's appreciation. Another example of using debt to invest in appreciating assets is stock market investing. By using leverage, which we'll discuss more in a moment, you can invest in stocks with borrowed money and potentially generate higher returns than if you were only investing with your own funds. Of course, investing in the stock market comes with risks, and it's important to carefully consider your investment strategy before taking on debt to invest. Now let's talk about the concept of leverage. Leverage is the use of borrowed money to increase potential returns on an investment. When you use leverage to invest, you're essentially using other people's money to increase the size of your investment. This can be a powerful tool when used responsibly, as it can amplify your returns. However, leverage also comes with significant risks, as it can amplify losses just as easily as it can amplify gains. So how do successful investors use leverage to build their wealth? Let's look at a few examples. One well-known example of using leverage to build wealth is Warren Buffett. Buffett is known for using insurance premiums as a source of leverage to invest in the stock market. He essentially uses the premiums paid by insurance policyholders to invest in stocks, which has allowed him to generate significant returns over time. Another example of using leverage to build wealth is real estate mogul Robert Kiyosaki. Kiyosaki is known for using other people's money to purchase rental properties, which has allowed him to build a significant real estate portfolio. By using leverage to purchase multiple properties, Kiyosaki has been able to generate passive income from rental payments while also benefiting from the appreciation of the properties. Of course, it's important to note that these examples are of highly successful investors who have carefully considered their investment strategies and risks. Using leverage to invest is not without risk, and it's important to carefully consider your own financial situation and investment goals before taking on debt to invest. So, to summarize, leveraging debt to build wealth can be a powerful tool when used responsibly. By investing in assets that appreciate over time and using leverage to amplify your returns, you can potentially grow your wealth more quickly than if you were only investing with your own funds. However, it's important to carefully consider your investment strategy and the risks involved before taking on debt to invest. Managing debt responsibly. In this section, we're going to talk about managing debt responsibly. First and foremost, it's important to understand the importance of managing debt responsibly. While borrowing money can be a powerful tool for building wealth, it can also lead to financial ruin if not managed properly. Accumulating too much debt or falling into debt traps can quickly spiral out of control and result in long-term financial struggles. So, how can you avoid accumulating too much debt and falling into debt traps? Here are a few tips. Create a budget and stick to it. One of the most important things you can do to manage your debt is to create a budget and stick to it. This means tracking your income and expenses and making a plan for how you will spend your money each month. By sticking to your budget, you can avoid overspending and accumulating more debt than you can handle. Avoid high-interest debt. Another important tip for managing debt is to avoid high-interest debt whenever possible. Credit card debt, for example, can come with extremely high interest rates that can quickly add up and make it difficult to pay off your balance. Whenever possible, try to use low-interest debt, such as a mortgage or car loan. Pay more than the minimum. If you do have high-interest debt, such as credit card debt, it's important to pay more than the minimum payment each month. By paying more than the minimum, you can pay off your debt more quickly and avoid accumulating even more interest charges. Build an emergency fund. Having an emergency fund can help you avoid falling into debt traps when unexpected expenses arise. Try to set aside at least 3 to 6 months' worth of living expenses in an emergency fund, and only use it for true emergencies. Now let's talk about the importance of maintaining a good credit score. Your credit score is a measure of your creditworthiness, and it can have a significant impact on your ability to borrow money in the future. A good credit score can help you qualify for lower interest rates and better loan terms, while a poor credit score can make it difficult to borrow money at all. So, how can you maintain a good credit score? Here are a few tips. Pay your bills on time. One of the most important factors in your credit score is your payment history. Make sure you pay your bills on time each month to avoid late fees and negative marks on your credit report. Keep your credit utilization low. Another factor that affects your credit score is your credit utilization ratio, which is the amount of credit you're using compared to your total available credit. Try to keep your credit utilization below 30% to maintain a good score. Monitor your credit report. Finally, it's important to monitor your credit report regularly to ensure that there are no errors or fraudulent activity. You're entitled to one free credit report per year from each of the 3 major credit reporting agencies, so take advantage of this and check your report at least once a year. In summary, managing debt responsibly is crucial for building wealth and avoiding financial struggles. By creating a budget, avoiding high-interest debt, paying more than the minimum, and building an emergency fund, you can avoid accumulating too much debt and falling into debt traps. Additionally, maintaining a good credit score by paying your bills on time, keeping your credit utilization low, and monitoring your credit report can help you qualify for better loan terms and build your wealth over time. Let's quickly summarize the key points we covered in this video. First, we discussed the different types of debt, including good debt and bad debt, as well as credit cards, personal loans, and mortgages. We also highlighted the pros and cons of each type of debt to help you make informed borrowing decisions. Next, we talked about leveraging debt to build wealth, including the concept of leverage and how it can be used to increase returns. We also provided examples of successful investors who have used debt to build their wealth. Finally, we discussed the importance of managing debt responsibly, including tips on how to avoid falling into debt traps and how to maintain a good credit score. It's important to note that while borrowing can be a powerful tool for building wealth, it should always be used responsibly. Taking on too much debt can lead to financial stress and even bankruptcy. That's why it's important to carefully consider your financial situation and investment strategies before taking on debt. However, when used responsibly, borrowing money can help you invest in assets that appreciate over time and ultimately grow your wealth. Whether it's through real estate investments, stocks, or other forms of investing, borrowing can help you unlock the potential for higher returns. So, we encourage you to start exploring how you can use borrowing to grow your wealth. Remember to always borrow responsibly, consider your investment strategies and risks, and manage your debt carefully. Thank you for watching this video on the art of borrowing. We hope you found it helpful and informative. If you have any questions or comments, please feel free to leave them below. And don't forget to subscribe to our channel for more tips and insights on personal finance and wealth building. Thanks for watching, and we'll see you in the next video.